Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Fiery address. U.S. President Trump takes aim at the United Nations while urging Western nations to crack down on immigration and climate change. No risk-free path for the Fed. Chair Powell says the outlooks for the labor market and inflation face challenges, while giving no indication whether he will support a further rate cut next month. And Ukraine shift. Trump strikes a more optimistic tone about Ukraine's prospects, saying it could reclaim all territory lost in the war. He also urged NATO to shoot down any Russian aircraft violating the alliance's airspace. It's just gone 8 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Well, that very fiery speech at the UN General Assembly, we're going to be talking about some of the takeaways from Trump's speech yesterday. So much to go through. On the markets front, a lot of attention paid to Powell's speech yesterday, also giving somewhat of a non-committal tone vis-a-vis the prospect for further interest rate cuts, saying that the path isn't clear, citing obvious downside risks to the labor market, but increasing amount of upside risk to inflation too. So a bit of a mixed picture emerging from Powell yesterday. And what we saw was a pullback for Wall Street, so pulling back from those record highs that we've been referencing almost day after day with these stock markets. Asian markets also following suit. Today, S&P futures trading sideways, up about 5 basis points. Asia Pacific, the handover also slightly weak today, down 7 basis points. Again, knock-on effects from Powell and other policymakers' non-committal stance vis-a-vis further interest rate cuts. And remember, the dot plot had suggested another 2 interest rate cuts were to come. Yesterday's language suggests otherwise. Brent also in focus, just trading shy of $68 here, about 0.3% firmer. This perhaps in reaction to some of the comments that President Trump made yesterday, more supportive of Ukraine, perhaps a harsher stance towards Russia, could have energy ramifications, especially as we speak to some of the energy infrastructure that Ukraine has been targeting within Russia. So that's having an impact on the energy complex. And then the USD slightly firmer today, up 10 basis points, as we're seeing a bit of a pullback for risk around the world. But let's talk about some of the regional geopolitics too. President Trump has used his address to the United Nations to take aim at countries that recognize a Palestinian state. Trump says the move is granting a reward to Hamas when nations should instead unite under one message of encouraging the release of the hostages.
Some of this body is seeking to unilaterally recognize a Palestinian state. The rewards would be too great for Hamas terrorists for their atrocities. This would be a reward for these horrible atrocities.
Joining us now is Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Dalia, a rift has most definitely emerged between the United States on recognition of Palestinian statehood versus some of its closest allies, which, as we know, in the last couple of days have moved to recognize Palestinian statehood. The U.S. is staunchly opposed to a unilateral declaration. What does this all mean for the prospects of a two-state solution?
So it's a really complicated question because, yes, 160 countries coming together over the past couple of years, but really the critical ones in the last few days to recognize a Palestinian state. The prospect of it becoming a reality is a very far and distant one, especially without the United States. Now, what does recognizing a Palestinian state in reality mean? It means that perhaps trying to rescue the diplomatic relations between certain countries, but also what does it mean to talk about a Palestinian state coexisting with Israel? Is a two-state solution really even viable? And how can this be achieved? You know, even PM Stromer said today that this is hanging by a thread because much of Gaza continues to be occupied, and there is discussion to extend Israeli sovereignty over the West Bank. And so there isn't the space on the ground to really talk about a Palestinian state. And these plans are being pushed hard by far-right ministers within Israel, even though 160 international countries are coming to talk about a two-state solution and the recognition of the state of Palestine. And so while this is happening today, it begs the question of why, when the reality is we have not been looking at a viable two-state solution for quite a while, especially in the current political climate and context vis-a-vis Israel and its far-right government.
And you talk about the importance of the diplomatic channels. I also watched the Emir of Qatar's speech yesterday. And, throughout the speech, he also criticized Israel as well, saying that they're acting like a rogue state, that Qatar had played a huge mediation role over the course of the last couple of years to secure a ceasefire, to secure the release of hostages. But the actions and the attack on Doha a couple of weeks ago obviously threw a lot of that into jeopardy. What hope is there for further mediation talks, specifically when it comes to securing a ceasefire, or is that now on the back burner?
We did see a common theme on the first day of the discussion of the UN General Assembly, in that Israel has violated the sovereignty of half a dozen states. And so this conversation about what does this mean for what's coming in the language of certain states to be deemed a rogue state is quite telling. In terms of the role of Qatar, the accusation against it, or the allegation against it, is that it hosts members of Hamas. They host members of Hamas at the request of the United States and Israel as well, interestingly enough. And so their role as mediators in this was one that came at the request of the very countries that are accusing them of being of harboring terrorists. And so it begs the question of what then is the role of diplomacy. And so what we saw on this first day of the general debate on the 80th anniversary of the founding of the United Nations, where the conversation is still going back to violations of sovereignty, what is the diplomatic role of these countries, and what does the role of third-party mediation really mean? And so here's a country like Qatar that's put its neck out at the request and behest of the United States. Qatar, of course, also houses the largest U.S. military base in the region. And so for it to be attacked, interestingly enough, in the past couple of months by both Iran and Israel begs the question of what is the future role of diplomacy and mediation in the region?
Yeah, Iran as well. A very good point. Look, I want to bring up something else. We had quite a surreal moment a couple of days ago with the former CIA director, David Petraeus, sitting down in a fireside chat with the interim Syrian president, Ahmed al-Sharaa. Of course, once upon a time, longtime foes. The CIA former director had actually arrested Ahmed al-Sharaa at some point in history, but was now sitting there praising him. Actually even said, he admires Sharaa's vision for the country. What do you make of this rehabilitation of Ahmed al-Sharaa on the global stage, especially at the UN this week?
Honestly, it reminds me of when, under the first Trump administration, we saw the kind of handing over of Afghanistan to the Taliban by the very people who were on the most wanted list, and again, being praised by members of the U.S. administration. And so it harkens back to that moment. But what we're really seeing in Syria is the possibility of the test of the future. Syria is supposed to have in just a few days its first parliamentary election. And so what we're seeing is a test of, can this new interim president, I know interim government, actually follow through on the promise of a democratic election? The criticism has been that most of the minority communities within Syria still feel marginalized. And even in this coming election, the 210 members, al-Sharaa will appoint 1/3 of them. And so it's an interesting mix between mediating the self-interest of this new leader and trying to establish himself, because his election is not for another 5 years. But what does this parliament mean, or this assembly mean, and its makeup and future of Syria? It looks like it might lack inclusivity. It's questionable whether he can secure the entirety of the territory. Is he using this election for some kind of internal recognition? And what exactly is the infrastructure of the election? And so there's a lot of things up in the air, but to see the visuals that you mentioned, and even to see him speaking at the United Nations itself, is quite telling in this interesting moment of, is this really a moment of change, or is there something else happening that we need to question much more deeply? I think for the Syrian people, the question is this the democratic moment of the future, coming off of decades of authoritarianism? But on the international world stage, we're seeing very interesting players come to the forefront to represent countries in ways with which historically they were deemed persona non grata and really guilty of some pretty violent acts.
Truly remarkable, remarkable turnaround in international perception and reception towards Ahmed Shara. Dalia Fahmy, thank you so much. Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Thank you. Well, during his address to the United Nations, Trump also struck a more optimistic tone on Ukraine's chances of winning the war, saying he thinks Kyiv is positioned to fight back and reclaim lost territory. He also says NATO nations should shoot down Russian jets that breach their airspace. Joining us now is Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingstone-Wallace. So, can we call it another 180 from Trump? But definitely a lot more supportive of Ukraine and a lot more critical of Russia this time around.
I mean, it is quite a change from previous positions, for sure. But he's been going in that direction, I think, gently, particularly since Alaska. I think there's been a great deal of disappointment. There's been absolutely no movement whatsoever. And if anything, we've seen an escalation in the provocations come across on NATO's eastern flank. So we'll see what this looks like going forward. He's not actually pledging for the US to get involved. I mean, he's saying we're going to sell the weapons to the Europeans and they can do with them what they want. But yes, it's clearly much to the advantage of Ukraine relative to a few months ago. You remember that incident in the Oval Office when Zelensky was somewhat cornered.
Does this, obviously a lot of this is rhetoric, but does it meaningfully impact Ukraine's chances at winning this war militarily? The fact that the U.S. has so notably and on very public stage changed their tact recently?
I don't think it necessarily changed the position of any of the existing allies. And if anything, over the last several months, you've seen the Europeans getting a great deal more aggressive in terms of their support, in terms of the weapons coming in, the amount of money being pledged, and so on. So, no, probably not in the short term, but in terms of, I would say, morale within Ukraine, this has to have a positive impact, right, at least in the short term.
Yeah. All right, Stuart, thank you so much. Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. And coming up, our next guest says 2 rate cuts for 2025 could be a stretch. We'll hear why from Shuaa Capital's Aarthi Chandrasekaran. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Shumana Bersachi in Dubai. Fed Chair Jerome Powell has repeated his view that near-term risks to inflation and the labor market pose a difficult situation for policymakers, while offering no hints on the central bank's future rate path.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path.
Let's bring in Aarthi Chandrasekaran, head of public markets at Shuaa Capital. So Powell's saying it's a challenging situation, that there are risks both sides. I thought a week ago everyone was saying that the Fed were focusing just on one side of the mandate. He obviously used this speech as a reminder that there could be some inflationary upside risks coming as well.
Yes, and that's something which is not factored in any of the risk assets. I think Fed is definitely inclined to cut, which is why they introduced an additional rate cut dot plot for 2025, but there is no promise to cut. And they are bothered about the downside risk to labor market, but they are also thinking more about the inflation. And if the labor market actually revives back, which we have seen in Jumana in 2023 and 2024, we saw private sector payroll was weak during summers, especially private sector payrolls excluding education and healthcare was quite weak in summers, to the extent we thought recession could be imminent. But then Q4 it revived back. You might see the same playbook actually playing out this year, which then means if the downside risk to labor market moderates, then Fed doesn't have to do much.
Yeah, and also, we spoke about this in the past, but the break-even rate for non-farm payrolls is probably a little lower than it was before due to immigration effects, and they're still trying to piece all of that together and get a proper picture of what the labor market looks like. On the inflation side of things, the Kubesi letter, which is widely read in the industry, put out a note yesterday saying that 72% of CPI components are now surging faster than the Fed's 2% target. Is this something that we should be worried about in the coming months, that inflation could actually accelerate?
I think so, too, because it is not in any of the prices, number one. Number two, I think all of us have forgotten, for some reason, tariff has not filtered into the economy, which is extremely surprising.
Well, it takes time.
It does take time, and the fact that just because it's taking time, it's completely out of our window and out of our focus. But then eventually when inflation starts to creep up, it's still elevated, it's very sticky, it's nowhere close to Fed target, and it's going to go higher before it comes lower.
So the counter-argument to that, and this is something that the Fed chair himself has referred to, is that it's almost going to be a step change. It's a one-off hit. It's like a tax, right? You've got the tariff hit, it's a one-off, and policymakers will look through that because it is one-off and not necessarily going to lead to sustained price increases.
But it doesn't matter. It is a price increase. It is going to have an impact on your consumer spending, on your retail
on
sales,
expectations.
on expectations, on inflation expectation, on the if it might go unanchored as well. So it does have an impact on the long end of the yield curve.
Okay, so you don't think the Fed are going to be able to deliver on the rate cuts that are priced in for next year, reading between the lines?
For this year, 2 cuts is a bit stretched to me. I'm still factoring in, I'm still modeled for just 1 cut between now and end of the year, because I still think that the labor market weakness could moderate and inflation would become the primary focus for the later half of the year. Next year, when Chair Powell is not actually the chair, then we might have some dovish tilt from the new Fed chair.
That's the second half of the year, though.
Yes.
So, okay, let's put you. We've got your macro thesis together. What does that mean for markets, where you've got, S&P keeps making record high after record high, quite lofty valuations. You have credit spreads trading close to historic tights. Could we see some repricing go on there?
We do expect on the credit side that we might expect to see a steepening of yield curve. The curve has moderated slightly just before the Fed meeting. We see a bit of a steepening, but if inflation's risk starts to refuel again, you might see more steepening of the yield curve. On the equity market is actually pricing in a perfect picture wherein the Fed is cutting in aggressively in a beautiful economy, right? In an economy which doesn't really warrant so many cuts. And it's amazing for risk assets. The key risk in equity markets to me is something like 2022 bear market, wherein inflation doesn't have to resurge quite high, but even if it starts inching up slightly higher, then the Fed has to pause, and that's really bad for the tech stocks, especially because they're more sensitive to rates, more than they're sensitive to growth, and you might see a bit of drawdowns there.
Yeah, but I don't know. I mean, again, the flip side to that is rates have been elevated all of this year, and it hasn't stopped the Magnificent Seven from rallying 50% from the April lows.
Correct, but if your long end of the yield curve goes unanchored and inflation expectation goes really high, we have seen this in 2022 as well, when rates start to flip at 450, 460, things become a bit jittery as far as S&P and especially the Max 7s are concerned.
Yeah, are you viewing then opportunities outside of the U.S.? I mean, how are you positioning your portfolio now?
We like the tech names in the AI story.
In the U.S. or in China?
China is great because it's done really well. But as far as EM is concerned, I like from the valuation perspective, but you've got to be extremely selective as far as the stock picks are concerned. EM could rally more because of dollar weakness. Investors are not positioning themselves so much into it. And I think the whole tariff narrative is overstated in EM. China and India, you have a lot of stocks which doesn't get impacted by tariff, mainly because you're all domestic oriented. Yeah. So yes, a lot of things are overdone, but the problem with EM is you've got to be extremely cherry picking. It is not a wider sector based story. It's not an EM story. You got to go in. An AI boom could actually happen in EM as well on the tech side.
Well, I mean, Alibaba is a good example today. Exactly. The stock is up 7% today not because of AI spend, but because they're committing to spend more in AI spend. Sometimes you just need to commit to spend more. Really good to chat to you. Thank you so much. Aarthi Chandrasekaran, Head of Public Markets at Shuaa Capital. And coming up, South Africa's trade minister has a big task on hand to improve trade relations with the U.S. We hear from Parks Tao next. This is Bloomberg. New Zealand has named Anna Bremen as the new Reserve Bank governor, appointing a woman to the role for the first time. Bremen is currently first deputy governor of Sweden's Riksbank and will start a 5-year term on December the 1st. Bremen says the RBNZ will remain laser-focused on low and stable inflation under her leadership and that she will strive for transparency, accountability, and clear communication. South Africa's trade minister says he's hopeful the U.S. trade pact, the AGOA, will be extended. The U.S. is South Africa's second largest trading partner after China. Meanwhile, Pretoria is also dealing with Taiwan's restriction on microchip sales over its close ties with Beijing. Parks Toh spoke to Chief Africa correspondent Jennifer Zabazaja about the conversation with Taiwan.
Well, of course, I think that we should continue to engage with trade partners and investors in the country. To the extent that they're raising issues of concern, we should be able to engage with them. I should admit I haven't had the opportunity to look at the issue itself and the details behind it to be able to give you a comprehensive response.
What would you say the current relationship is, though, between South Africa and Taiwan as far as trade goes?
Look, the trade environment has remained normal. Taiwan keeps a trade office in South Africa, and they continue to do work in the country. So from that point of view, there haven't been any challenges. I think that as a country, like with many other countries, we have a one China policy, and that's the basis on which our diplomatic engagements happen. But from a trade point of view, there haven't been any challenges.
Do you think if, in fact, we do see this restriction stay in place, there is a response that we'll see from South Africa? Is that something that would be at the top of your agenda?
I think it would be premature to say so. I think that one should engage with the detail behind the decision they've made, what the considerations were, and what our engagements with them or any other parties would be.
Have they spoken to you? Did you know that this was coming?
No.
You didn't know. Do you know some of the concerns that they've potentially expressed?
Well, it would be speculative at this point, and I'd prefer not to speculate.
What would you say, though, at least in terms of what this could mean for the current trade environment for South Africa, considering all the other challenges that the country is facing?
Well, look, as I said, I mean, part of the problem is when you're engaging in a speculative environment, you're likely to guess what their considerations are, and I'd prefer not to do that.
What have been your discussions over the past few days? You've been in the U.S., you've been traveling all over the world. Talk about the state of trade relations with South Africa and the U.S. and some of the country's other trading partners.
Well, we're currently in discussions with the U.S. government. We received a proposal around an agreement on tariffs, reciprocal tariffs, and what that could contain. We've given our preliminary comments. The U.S. has said that they'll give us a revised document on which basis we would consider what the proposals are and be able to get back to the U.S., give them a proposal. And from there, we'll be able to enter into discussions. We'll be able to enter into a conversation about what should be a mutually beneficial arrangement with the U.S. government.
That was South Africa's Trade Minister Parks Toh speaking to Bloomberg's Jennifer Zabazaja in New York. And coming up, a super typhoon Ragasa batters Hong Kong with powerful winds and torrential rain. We'll bring you all the details from Hong Kong next with the latest on casualties and also the destruction level. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Fiery address. U.S. President Donald Trump takes aim at the United Nations while urging Western nations to crack down on immigration and climate change. No risk-free path for the Feds. Chair Powell says the outlooks for the labor market and inflation face challenges while giving no indication whether he'll support a further rate cut next month. And Saudi Arabia is set to allow foreigners to own a majority stake in local companies as the kingdom looks to revive its underperforming equity market. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Let's get you up to speed on these markets. Global markets dipping a little bit after, I would say, less dovish commentary from the Fed Chair Jerome Powell yesterday, where he suggested that the outlook is quite challenging for them, both on upside risk to inflation and downside risk to the labor market, not as categorically dovish as the market would like to see. So we saw a bit of a pullback for Wall Street. S&P futures today leaning towards the green once again. Asia Pacific, the handover quite negative, down about 8 basis points. As we keep a close eye also on Hong Kong and the evolution of the typhoon there. We're going to speak to our colleague Yvonne Mann shortly about what's been going on there, but certainly big focus for anyone out in Hong Kong and the region. Brent also in focus today. We're trading just above $67, and this perhaps in reaction to some of the more critical comments that President Trump made towards Russia yesterday, and more friendly comments towards Ukraine as we speak to the possible ramifications on Russia and what this could mean for energy infrastructure, energy supply. So marginal impact there. And then the USD up 9 basis points today, so gaining a little bit of ground, but of course it has been one of weakness for 2025. Now, Super Typhoon Ragasa has lashed Hong Kong with tree-snapping winds and torrential rain threatening to cause widespread damage. The storm is starting to move away from the city as it heads for Guangdong. Let's bring in Bloomberg's The China Show co-anchor Yvonne Mann. Well, Yvonne, obviously you are broadcasting from home due to safety reasons. We've just been witnessing some of the images of destruction. Describe to us exactly how powerful this typhoon has been and the impact it's had on the city.
Yeah, Jemana, as you mentioned, right, Ragasa in the Filipino language, it means swift and fast moving. And this super typhoon definitely lived up to its name. It's been a pretty intense 10 hours, I have to say. And really, it was like a flip of the switch where I would say most of us have barely slept because at 3 a.m. or so, we woke up to basically howling winds, trees being toppled. There's a bit of reports of flooding around the city as well. So, this happened really quickly and quite intense, something that we haven't seen really since 2018. So since Mankut. So certainly that does, you see the images there of the waves really hitting the harbor and just being a coastal city that's very densely populated. It's almost like a triple whammy for Hong Kong. So that's why, we're hunkered down. It was too dangerous to head to work here this morning. I think a lot of bankers and traders out there have also either been working from home or also the banks have come up with some plans here for them to stay in hotels. I hear they've been shacking up at the Mandarin Oriental and Four Seasons hotels. Not too shabby, but it is because the Hong Kong Exchange has, kept things going. It's been operational. It was only just about a year ago when they scrapped this whole practice of shutting down the markets when there is an extreme weather event like this. So, it has been the biggest test yet. So we'll see if there's any impact in terms of volumes and like that. But, certainly things have been, in terms of the market side of things, business as usual. But yes, most of the city here, schools have been shut, businesses have been shut here. They've been telling us all day not to go out. But as you mentioned, they're looking at downgrading this storm now to a number 8, which is still the 3rd highest alert. But again, things are slowing down here right now. And the next step really is assessing the damage.
And to your point, the Hang Seng is up almost 1% in trading today. We've spoken about this with Alibaba, one of the main drivers, after they've announced their AI capex plans.
Yeah.
But let's bring it back to the typhoon. How quickly can the city go back to normal? Obviously, it become increasingly more resilient to these types of events. But how quickly can things return back to normal once the typhoon moves on?
It's been quite remarkable this year. I think it's been a very weird weather season for us here in Hong Kong. I think this is the 11th storm we've seen all year already. And in this category of a Typhoon 10, it's only happened, I think, 19 times since 1946. So it is quite rare and quite frequent now. But the city has really seen this before. The infrastructure is definitely in place. The government has put in a lot of money, billions of dollars, to try to work up its drainage, to try to avoid massive flooding and the like. So, I think right now we are assessing the damage still. We're still not hearing too much, but, our insurance analyst, Stephen Lam from Bloomberg Intelligence, says this might look like one of the costliest storms for Hong Kong since 2018. And, these insurance claims, they're saying, could rack up and surpass $100 million. And it's already left a trail of destruction, right? We talked about Taiwan, local media there reporting more than a dozen deaths, some injured as well, as it made its way through Taiwan. And next up is really what to watch in the southern coastal side of China. That's where this typhoon is heading to next, and also perhaps heading to west side and Vietnam. So it might still take a few days for this system to go through the region.
Bloomberg's The China Show co-anchor Yvonne Man in Hong Kong. Stay safe and keep us updated. All right, Iraq is finalizing a deal to restart oil exports from its Kurdistan region following a 2-year halt. The move risks adding crude to an already bloated global market. For more, we're joined by Bloomberg's energy reporter Aarthi Chandrasekaran. Okay, first of all, for people who are not so familiar, just give us some of the context here. Why is this deal held up, and what is the background between the blockage of this pipeline between Kurdistan and Iraq?
Good morning, Jumana. Yeah, it is held up, and it's been a 2-year kind of saga going on. So this blockage started in March 2023 over a pipeline dispute between Iraq, where the oil is produced, and Turkey, which has a pipeline to port Ceyhan on its Mediterranean coast. So that's how Iraq had been exporting its oil from those northern fields. Also, part of that issue is that those fields are in the Kurdish regional semi-autonomous region in the north of Iraq, and they had gone ahead and signed some contracts with international companies and been exporting that oil on their own. That's at root a dispute between revenue sharing in Iraq, which still hasn't been worked out. So Iraq wants to sell all the oil produced in the country on its own by the state marketer, and then distribute the money throughout the different regions. So the Iraqis and the Kurdish semi-autonomous region are working on that deal. At the same time, we've got those international oil companies who want to make sure that those contracts that they have to produce oil up there are respected and that they can continue to get paid. So what we're seeing is an agreement working through between the government and the Kurdish region about revenue sharing at the same time as the Iraqi central government and the state marketer work on payment assurances for those international companies so they can restart those exports.
So what does that deal ultimately look like then?
Yeah, the deal looks like those companies will sign an agreement with the Iraqi central government. Those exports will resume through that pipeline, and they'll go to Ceyhan and they'll hit global markets from there.
And in terms of the actual volumes that are expected to hit, could this move the needle? Remember, in the context of global macro, and we speak about the upcoming supply glut, is this going to influence?
Yeah, I mean, that pipeline was about 500,000 barrels, roughly, in terms of capacity, in terms of exports out of the north. So that's a big chunk. Now, the Kurdish companies have been producing, they have been selling locally, they have been potentially trucking some out. It's hard to see what that real number is. And then Iraq is always one of those kind of people that's bumping up or going over their quota. So we're also going to see how that added production impacts the quotas there with OPEC and with the market.
Aarthi, thank you so much. Aarthi Chandrasekaran. Well, Israel's push to take over Gaza City is expected to add $7.5 billion to the war bill through the end of the year. The added costs are equivalent to more than 1% of GDP. Israel is also allocating about $49 billion on long-term procurement to build up its military capabilities in the future. Let's now bring in Bloomberg's Carla Canavati from our Middle East and North Africa economy and government team. So some numbers have been put out by, I believe it was the Israeli ministry not so long ago, assessing the cost of the war on the economy. Just bring us those figures and what they said.
So the numbers are what we've learned from officials in the Israeli government. And as you were saying, the Gaza City, which is quite a big operation, is now underway. And what we've learned is that operation is going to add $7.5 billion to the war bill. And I believe that is about a tenth of these are in shekel terms, 25 billion shekels against the 204 that the 2 years of war have tacked on to the budget for now. And even though, as you say, 1% of the budget, of the GDP, you would think that is not a lot, but in reality, 1% of the country's GDP is quite a lot. And also, we were able to obtain a breakdown of where these costs are going to go. And one of the biggest items is reservists. For the Gaza City operation, at the peak, we will see 130,000 reserve soldiers being called into the army. So that is...
Wait, hang on a sec. So you're telling me that they're spending more on personnel and on pay towards the reservists than on ammunition and military equipment?
Yes, the ammunition and the interceptor missiles, that is item number 2. But in reality, the biggest slice of the budget is going to reservists. because if you think all of these people, the government will ensure that their salaries are still being paid in full. And with that, and there's also some added benefits that get tacked onto that. So it is quite an interesting bill.
And so is this factored into the Israeli budget for the rest of the year? Has it been accounted for? Are the costs surmounting and adding, surpassing what they had originally envisaged?
They will. And also important to say that the 7.5 billion are through the end of the year. And if you think that the IDF has said, they have said themselves that there will be several months of this operation in Gaza City, so this can quickly pile on. It is definitely a moving target, and so far the budget deficit for Israel stands at 5.2, and it was recently, Parliament is waiting to pass that one. There might be a little overlap, but I think that it is possible that as the operation goes on, we might see the number go a little bit up.
Carla, thank you for bringing us the numbers. Carla Kenivati from our Middle East and North Africa economy and government team. And coming up, Nigeria's central bank cuts its key interest rates for the first time since the pandemic. We'll tell you why next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Botswana's president says he wants to take a majority stake in De Beers by the end of next month. That's as Anglo American looks to sell its 85% stake in the diamond company. Duma Boko spoke to Bloomberg's Jennifer Zabazaja in New York.
Anglo holds 85% stake in De Beers, and Botswana, the government of the Republic of Botswana, holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake in De Beers to a controlling stake that is upwards of 50%.
Would you go higher than that? Would you consider taking it over?
Yes, we'll go higher.
Why?
But because we want to have effective control of the industry. We want our voice to be heard. It's a matter of economic sovereignty for Botswana. It is absolutely imperative for Botswana at this point, particularly, to take a more active role and increase its stake.
Kenya is set to raise more than $1 billion in an IPO for Kenya Pipeline later this year. President William Ruto says the government is planning to sell as much as 65% of the state-owned company, which generates about 30 billion shillings of revenue a year. That's part of a larger target for listings, with the Nairobi Securities Exchange aiming for 40 new IPOs by 2029. Nigeria's central bank cut its key interest rates by 50 basis points for the first time since the pandemic due to slowing inflation. The interest rate cut makes it the last of Africa's 4 largest economies to begin easing monetary policy. For more, I'm joined by Bloomberg's Ondiro Ganga. So Nigeria, the central bank, finally cut interest rates. This is the first time since the pandemic. What was the justification?
Jumana, there are a couple of reasons, but one of them is that inflation has been on a downward trajectory. The country is experiencing a disinflation trend, and inflation has gone from a high of about 34.8 to now 20.1% in August. And if you look at the beginning of this year, inflation has just been going down and down and down. And this is giving them that confidence to say we are now in the green and maybe it's time to consider cutting rates. And also, you can also attribute this to the tight monetary policy stance that the central bank has maintained. Rates went from about 18% to a high of 27.5%. You also have recovering energy prices, not just on the African continent, but also in Nigeria. And their currency has been very resilient. It went from losing over 70% of its value to the dollar to gaining 2.8%, and also recovery in the agriculture sector. And that is why we saw that 50 basis points cut by the central bank from 27.5 to 27%. And the central bank is confident that inflation inflation will continue going down. The same sentiments are echoed by Bloomberg economist Yvonne Hango, who says that inflation is expected to go below 20% by the end of this year. And towards next year, it's about to hit 13%. The central bank, a little bit modest, doesn't almost want to show both. Say they want to take it down to single digit, but they're not going to put a timeline to it. And as a result, Bloomberg economist thinks that there's room for another rate cut in November. And this is in line with what also analysts at Rand Merchant Bank say, although they're projecting a 150 basis points cut in November and then all the way to 2026. And the central bank is also saying that this can be attributed to some of the reforms that the government has undertaken. They decided to float their currency. They harmonized their parallel market to the official market. And also they removed fuel subsidy, which was a really painful process. Fuel prices doubled, transport costs tripled. But outside of the pain that the country had to endure for a period of 2 years, the government and the central bank thinks that the monetary policy and the fiscal efforts that the government has been putting in place is beginning to pay off.
Okay, so on one hand, you have inflation that's moving in the right direction, and they're forecasting inflation to be lower. But on the other hand, they had GDP data coming through the other day, showing that the economy had expanded at an annual 4.2% in the quarter. That is the highest level of growth that Nigeria has witnessed in 4 years. How likely is it that this, I would say, oil-induced growth pickup in Nigeria is going to continue?
Jumana, there are variables to this, particularly because not all chips are in their hands. You have OPEC quotas, you have pricings in the international market. And so you cannot say with certainty that this is going to be sustainable growth. But what Nigeria is doing in the interim is they're taking maximum advantage of this window of opportunity that has actually presented itself. We've seen the oil sector grow to 20.5% in the second quarter from 1.9% in the first quarter. And they've really ramped up production from 1.4 million barrels per day to 1.68 million barrels per day. And they see room to do more. The National Petroleum Corporation says that they could push it to 2 million barrels per day leading to 2027 and 3 million barrels per day all the way to 2030. But this is subject to a couple of things. They're just making estimations and being hopeful that the market will be able to absorb everything that they are producing. We've also seen the government try to introduce some reforms, including reduction of vandalism, ensuring that they have a favorable regulatory policy environment, and also security reforms. But on the other hand, we've also seen non-oil sector being very resilient, growth of 3.6% from 3.2%. And this is mainly attributed to industries like telecommunication and also agriculture.
Andiro, thank you so much for giving us an overview, not just of the cut, but also the Nigerian economy as well and how it's been faring the last few months. Bloomberg's Andiro Ganga, thank you so much. And coming up, Saudi Arabia considers a change to its foreign ownership law. We cross to Riyadh next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. And in a dramatic move, Saudi Arabia is set to allow foreigners to own majority stakes in local companies. Currently, there is a cap of 49% for listed companies. Bloomberg Saudi Arabia Bureau Chief Christine Berg joins us now from Riyadh. Christine, what do we know about this? It seems to be a really major development.
Yeah, Jumana, this is really a big step. So we had an opportunity to sit down exclusively with the CMA, and we asked them point blank, when will regulators lift this majority foreign ownership rule that has been in place for years? And as you said, limits foreign investors to owning just 49% of Saudi equities. And what the CMA said was that a review is currently underway. And while there are many stakeholders that need to approve a lifting of this restriction, they do expect that it is going to come before the end of the year. Now, we do not know how much they will lift the restriction, whether that means we see the 49% jump to 60%, 70%. Maybe they go for it and do 100. But no matter how you look at it, any move above 50% would be significant. And this is just the latest in a series of steps from the CMA to open up the Saudi market to foreign investors. So really, this is one in a series of steps, but the most significant will be the first time ever that we would see foreigners allowed to own a majority of Saudi equities.
And could this have an actual implication or bearings on the broader market as a whole? You know, earlier this year, we've been speaking about the underperformance of the Tadawul. Could this actually bring about a change in sentiment?
Absolutely, it could, Jumana. So there are a couple of reasons why this is so significant. The first is it comes down to the weighting of Saudi Arabia and the MSCI indices. So Saudi Arabia is currently in the MSCI Emerging Market Index and also the All Country World Index. MSCI factors in a foreign inclusion factor when calculating the weighting of Saudi equities in its benchmarks. So by nature, or by default, if Saudi Arabia raises the foreign ownership limits, then it means that Saudi equities will then have a stronger weighting in the MSCI benchmarks. That means that we will see more passive investment in the region, possibly to the tune of billions of dollars from what I'm hearing from investors and people that have been reaching out to me in the last 24 hours. So we're talking about a potential boost in inflows. And I think there's also a big psychological barrier here that we would be removing investors knowing that they could own a majority of a Saudi company. A couple people have told me, well, maybe that paves the way for more cross listings. Maybe this paves the way for more M&A, and it certainly will prompt investors to take a look at this market a bit more seriously. And I think that's exactly what the Saudis want here after months of underperformance for the stock market. Really, this has the potential to jolt the market back to life.
Yeah, and it certainly does appear to be the case with some of the pre-market performance of these Tadawul stocks. Christine Berg, Bloomberg's Saudi Arabia Bureau Chief, thank you so much for bringing that a very important story. And sticking to Saudi Arabia, vacation rental company Gathern is targeting an IPO in 2028 after securing $72 million in its latest round of funding. The company says it plans to use the money from the Series B round to diversify into car rentals and flight bookings, as well as expand in the region. Gathern's IPO comes as the kingdom plans to rely more on its tourism and hospitality sector and diversify away from oil. And a quick look at how equity futures are trading. A bit of a pullback yesterday for markets after Powell's speech, where he emphasized that there are twin risks, both on the upside to inflation and the downside to the labor market, not as dovish as some people had hoped for. European markets seen opening down in the red, down 0.4%. That is it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.